I got Brittany Hill here with me from CMG Home Loans, right? I got that right? Mm-hmm. Yeah. Mm-hmm. How long have you been with CMG?
3 years. 3.5 years.
Nice.
Yeah.
And we're toward the tail end of 2025. We got a ton of crazy stuff going on. Hopefully some of the stuff we talk about today will be timeless, but some of it's going to be more relevant to our market. Mm-hmm. Some of the things that I wanted to chat with you about since I got you, since you're a good lender, there's a lot of bad lenders out there. Well, first question I think would be kind of prudent, because you're on the lending side, what are some of the big questions that you're getting from buyers or sellers in the market that we are in right now? And just to give a little bit of background on kind of where we are at right now, mortgage rates are historically high. I mean, over the past, I think it's been 18 years or something like that, somewhere close, 15 to 18 years.
Yeah.
We're at historic high. We've been fluctuating from 6.5. I think we've been all the way up to 8.
Yep.
We did have one rate reduction this year from the Fed. Mm-hmm. We're talking about having 2 more, but I think it's more relevant that the 2 rate reductions aren't here yet. So it's more about kind of what's going on right now. Mm-hmm. And we've seen this kind of shift from a seller's market where it feels like we've had a seller's market since COVID.
Yeah, for sure.
And now it's kind of shifting more into that buyer's market. So I think it'd be kind of cool to hear on the lending side, what are you hearing and what are the biggest questions that are coming up?
Some of the biggest questions are, should you wait because of rates, right? Them being higher. When is a good time to refinance, again, pertaining to rates? And then as far as sellers go, there is a pretty big, how do they compete against the new builds? Because they have great interest rates for sure. You and I had talked to you about sending one of my clients to a new build because that just made more sense for them.
Right.
Which kind of stinks for sellers. And then also competing against the other people that are in their area. I have one client that he listed his home 3 months ago and it was in contract, but when he listed, there was only 2 other homes in the area. Now that fell out, the buyer decided not to do it and they've relisted, and now there's 10 to 12 other properties on the market.
Right. I just came out with a video where we're talking about relisting, so stuff that's come back on the market from the past 2 years. But some of the things that I've started to see sellers do, in what you're talking about, one of them is we're seeing the most price reductions we've seen in years.
Yeah.
So either home values are too high, they're not priced correctly, right? So if sellers are coming to market priced correctly, we are actually seeing some multiple offer situations still.
Yeah.
But what are some of so we've got sellers that are lowering prices, we've got sellers that are offering concessions. Mm-hmm. I heard about a cool program that CMG has. Mm-hmm. Another benefit that sellers can offer, and CMG has an offer in there, I think, as well, that you can talk about.
Yeah.
They can offer to their buyer, right? Usually we think of the lender only helping the buyer out, right? Because that's your primary clientele. Mm-hmm. So can you tell us a little bit about that program that CMG offers?
Yeah, so it's called a list and lock, and essentially if you were the listing agent, then you would, I'd give you some stuff to take over to the seller, and you would present it, and if they're thinking about giving a seller credit, which is, right now probably pretty ideal, mm-hmm. they can use that to permanently buy down the rate, but then also CMG gives an extra 1%, which is awesome. So if the seller's giving a 3% seller credit, I'll give an extra 1%, so you've got 4% to permanently buy down the rate.
And that's 1% of the loan amount for the property, or is that 1% of the purchase price?
It's going to be 1% of the purchase price.
Oh, cool.
Yeah.
That's awesome.
Yeah. And then you list it like that, which is awesome. So we give you all the marketing and all the things, you and the seller, and so they can, there's videos for social media and all of that type of stuff, flyers, and you can market it to all of the buyers as such.
Cool.
Yeah.
Another thing that I feel like we're hearing a lot, because, and I was not victim to this. I did not go out and tell a bunch of my clients that you're going to be able to refi in 2 years. Just do the 2-1 buy down. It's going to be great.
Yeah.
So we've got a lot of those people that bought right 1 to 2 years ago, and they're either refinancing into that first, or excuse me, not refinancing. They're adjusting into that either first 1% or in some cases that's that 2% now. Mm-hmm. And so something I've been hearing a lot is, what's the rule of thumb, or how do I know when it's a good time to go in and talk to a lender about refinancing?
Yeah. So kind of my rule of thumb, and this might be different depending on what lender you talk to, but it's going to be what I've been seeing anyways, because I have clients that are, 8 1/8, so 8.125, all the way down to even 7.5, and they're chomping at the bit to refinance. But when I look at it, even though, yes, rates have been able to get a little bit better, it doesn't make sense for them unless it's at 1%. So 1% lower than what they currently have.
And so that 1% takes into account fees and all of that stuff when you're talking about that.
Yeah, and then you also want to make sure that you can recoup the costs, because there's a cost for refinancing. You want to be able to recoup that within 36 months.
Okay. With that in mind, is there a certain, so we're talking about that 1%. So when we see rates, if I'm at a 7% and now rates are at 6%, that's when it's a good time to start thinking about that. Mm-hmm. Is there a time frame too attached with that? Like, if I bought 1 year, 2 years, 6 months, 3 months, like, is there a time frame that you feel like fits into that as well?
So as far as a lender goes, we want to make sure that you've had 6 months of payments.
Okay.
But ideally, it depends on what people are putting down, right? But most of the time I see 3.5% to 5%. Your home probably hasn't appreciated that much in 6 months. So it's not always the best. In that case, if you were going to refinance that quickly, you would want more than the 1%.
Okay.
Otherwise,
so equity also plays a little bit of a factor into it as well. Okay.
Yeah, for sure.
One of the other, so with that, with the refi, isn't there something cool that you guys offer too? If I get my original loan through you guys and I want to refi, is there anything you guys offer?
Yeah, we do. We waive appraisal fee, we waive lender fees, I think the credit report fee, and we give $1,000 toward title fees. So if there's any cost in there, you can roll it into the loan, but the idea is that you pay very little, if anything at all, for refinancing.
Okay.
Yeah.
Cool. I've also been hearing about HELOCs lately. I've got more than a few people that I know that are going through divorce right now, which is shitty.
That's terrible.
And so with the HELOC, the specific question that I had, and I could be wrong, but I've heard that it's if you have, what kind of equity do you need in your house to even qualify or even think about doing a HELOC? And then what are the loan terms, like loan to value, that you do for a HELOC?
So for the loan to value, you want all the loans that you have on your home, so your first and then the HELOC, to be a max 90% of the value of your home. Okay. And that's we can go up to 90% if
I've heard 85 usually.
Yeah, typically it's 80.
Spot. Okay.
But you can do 90 if you have good credit and low debt to income ratio.
Okay.
Because then you're not so much of a risk.
And then what do you want that equity to look like? Or does it really matter as long as you've paid down enough of the loan, or you have enough of a spread to fit that?
Yeah, it doesn't really matter as long as that happens. Yeah.
Cool.
Yeah.
With divorce, I've heard about people racking up credit card debt. And I'm kind of curious. I know a little bit about it, right? Like, I know minimum credit scores and things like that, but how much, right, if you qualify, right, is it like it's like a 580 is the lowest credit score that you guys look for? Is it somewhere right around there?
Yeah, it's 580 with compensating factors, but yeah.
So probably still shouldn't be buying a house at 580.
Probably not.
So as we start to see that credit score go up, how much, not even from like from a qualification, but more so like, how much does that affect your rate and partially like what you qualify for as that credit score goes up?
It's actually quite a bit. So even if somebody was at 580 and you could get them up to a 600 or a 620, it makes a huge difference in what they pay for the interest rate. So when you hear people talking about points, that's what that is. When we say that interest rates are getting better or worse, it doesn't always mean that you're going from 7% to 8% or down to 6.5%, it could mean that today 7% cost you nothing, and tomorrow interest rates get worse, and so now they cost you 2 points, something like that. And
so when you talk about points, just really quick, because I'm also curious, is that based on is that almost like a risk profile, like based on like what kind of points you're paying from the lender's perspective of how risky is this loan and what points do we want them to pay kind of ahead of time, right?
Kind of, yeah. So on our rate sheet, when you look down at the bottom, like it takes into account your loan to value, your debt to income ratio. Sometimes states, Nevada is never a state that gets like a hit. But yeah, it takes into consideration all of that, and it'll like plus or minus some points. Maybe it's a quarter point or half a point or something like that, but you'll see it at the bottom. It does that. Yeah. So then it goes in increments though, as far as credit score. So you've got the 580, the next one you probably want to do 620, and then like a 640, 660, 680. Once you get to 760, that's the best rates you can get.
The creme de la creme.
Yeah. Most of the time you end up getting rebates on really good rates.
Cool. Awesome. The last thing I wanted to talk to you about, and then we'll wrap this up. So I've got a good example of a guy who owns his own shop, and he hasn't. So the business has been making money, but he hasn't been paying himself out. So can you talk a little bit about the bank statement loan and how the bank statement loan works?
Yeah, the bank statement loans are awesome. I even have, and I had never seen this.
Just to tee this up, right? Like, so when we bring a client to a lender, right, we as the agent always say, you got to have 2 years of history, right? You got to show that you've been employed for 2 years. So that's where this bank statement loan can kind of come into play if you can't show, right, that you have been making a paycheck for 2 years. Yeah.
I mean, so when I use a bank statement loan, it's normally because it's somebody that's self-employed that is, at least within the 2 years still. But when you look at their tax returns, they're not making any money, and they're probably negative, right? Because they write a bunch of stuff off. So the bank statement loans, you still need 24 months in most cases of bank statements, and then we just go through and see what the deposits are versus, the debits. And then we come up with an income using that, which is great. So then we don't need W-2s, we don't need tax returns, we don't care what you wrote off, nothing like that.
Is a bank statement, just really quick, because I'm curious, right? I've heard about people getting loans that don't have credit, right? They don't have bad credit, they just don't have credit. And is the bank statement loan something you guys would consider or do if somebody doesn't have credit? Is that?
Typically with pretty much every program, you have to have some credit. Like even if you had one score, as far as like what their credit score needs to be, it doesn't have to be perfect with the bank statement. Okay. It can be a little bit lower.
Okay. Cool. Awesome. Well, thanks, Brittany. And I'll have her contact info below, but hit up Brittany Hill with CMG.
Thanks.